Okay. Moving on over to a different sector, we're going to look at consumer defensive stocks. They mostly remain bearish, right? Which is surprising with inflation. Consumer defensive stocks are like Pepsi, Coke, Colgate, like all those kinds, Proctor and Gamble, Johnson and Johnson. You would think that with everything so sky high right now, the things that we need all day and that kind of stuff, you want to point out over here is General Mills. Pretty nice move off the lows and has now held that bid for 40 moving average. So we actually have this 4-day pause. Remember what we just talked about? General Mills held the bid after that move. It did not pull all the way back. It did not. Again, we just talked about healthcare, right? Healthcare melted lower for 8 weeks. So I just want to give you an example of what that looks like. So if we take a look at the healthcare ETF, you can see this move to the downside and actually this breakdown. So very obvious right now that we could say that healthcare is showing relative weakness, right? There was a period over here where it looked like it was going to break this downtrend. It didn't. It actually held it and pushed to the downside again. But again, this is doing the nightly homework, going to do your treasure hunt every night. Merck, MRK in that group is actually showing relative strength. So you just saw what the larger healthcare group is doing, and you can see Merck over here actually showing relative strength. Now, what's kind of interesting is this giant bullish engulfing candlestick followed by another breakout with good volume. Now, it's got a little bit of room up to that 116 level, but if we kind of break this down a little bit more and look at profit potential and kind of zoom this thing out, you can actually see that Merck is not that far from all-time highs. And last month actually traded into a giant, this month traded into a giant reversal pattern coming off over here. So these little kinds of clues, especially if you kind of drop some volume in there, you can actually see above average volume on this giant reversal. And this level over here around one, it's got to get back and stay above 110. That's basically the level that I'm keeping an eye on right now. Okay. Basic Materials gives us a chart similar to Merck. MOS, which you can see here, showing some good relative strength compared to the rest of the group. So again, we could take a look at the Basic Material group, and you can see they have mostly been bearish. But again, this is where we learn to stack the order flow. Stacking the order flow is recognizing it. Again, I'll show you how to do that. Recognizing it from one day to the next, 1 week to the next, 1 month to the next. So nothing outstanding here, right? But wait a minute, that's interesting. And look at the volume. So now you'd be like, great, Basic Materials actually did something with big volume on Monday. Is there anything in Basic Materials that might make me sit up in my seat and pay attention? I'm going to show you two different versions of two trades that meet that criteria. The first one is Mosaic. Mosaic actually rallied and actually is sitting at an optimal entry last week. So the market took off to the downside last week. Mosaic actually rallied. You can see there's some massive resistance over here in the 55 area. So it's actually a two-step trade. One trade up to 55 and then considering to add over that.